Welcome to our 2020 Africa Roundup interview series. These are a series of conversations to round up this extraordinary year with leading advisors and voices from Africa. I have the pleasure of speaking with Daniel Ngumy. For those that don't know Daniel, Daniel is a partner with Anjarwalla and Khanna, LLP in Kenya, who are also part of the Africa Legal Network. Daniel heads up the firm's tax team. He specializes in regional and international tax law and has extensive experience in tax disputes and tax transactional matters. So we're in the company of somebody that is a specialist on both the contentious and non-contentious side for tax purposes in Kenya. Daniel provides ongoing tax advice on matters affecting clients across various industries cross-border in the region. He has advised on a variety of matters from debt and equity transactions to mergers and acquisitions. And when he has in his spare time, Daniel also chairs the Kenya Law Society's tax committee and is a regular speaker at local and international conferences. He is ranked by Chambers Global under tax law and private wealth law. And for our purposes, also, early on in his career, Daniel also lived in the Channel Islands, not far from Jersey. So welcome, Daniel. Thank you very much. Thank you for taking the time to be with us today. Nice and easy. Let's start with a short summary of 2020 in the context of Africa. How would you summarize 2020 and its wider impact on Africa?
Thank you very much, Faisal. It's my pleasure to be here with you all today. Just quickly moving into the year 2020 for Africa. I think it's one of the most unique years we've ever had. And at the beginning of the year, of course, the projections for the year were very positive. Most of the African continent estimated that they were going to be growing. It was the last year of the decade or the first year of the new decade, depending on how you looked at it. And so there was a lot of optimism to what the 2020s would bring to Africa. Obviously, with COVID coming in, that changed everything. The African continent gradually locked up, and air travel was significantly diminished. At the beginning of the year, there was also a huge issue on oil, and that affected the countries that were highly reliant on the oil market. As a consequence, the economic projections across the African continent dropped significantly. Certain parts of Africa were better off. So, for example, I think in many ways, East Africa was probably slightly more resilient than the West, predominantly because there is more diversification in economies there. But when you look across the board and across the continent, it sort of turned out to be a very difficult year economically. As we talk through today's session, I think that may change in the course of next year, but we will touch on that when we get there.
Excellent. Thank you very much. That's a good summary. It has been an interesting and challenging year. You talked about the resilience of East Africa. Let's take a deeper dive into the East. How has East Africa fared during the crisis? Any specific highlights, good or bad?
I think it's been one of the things that I found quite remarkable is that, and we will talk about Kenya in more detail in a minute, was that when the financial projections recently came out, there was actually marginal growth on the Kenyan economy, and also quite some positive growth in Tanzania during this course of the 2020. And when I say that, I mean growth in the case of Kenya of as much as 0.6%, much lower than what was originally projected. But when you look across the world and the continent, where you're looking at recession, I think it's quite remarkable. I think the underpinning reason for this has been that, for one, Tanzania was one of the first countries to reopen. And when you look at when they began receiving tourists from across the world, they missed probably the first half of the year, but the second half of the year, they welcomed tourists from all over the world. When you look at other countries within the region, because they're not as reliant on minerals, their economies are more diversified. So in addition to tourism, which really suffered in hospitality, they also have financial services. They have fast-moving consumer goods, among others. So in a sense, what's happened in East Africa is that while the whole continent has been affected, to some extent, the impact has been less so in this part of the world. It has helped as well that initially it was feared that the COVID cases in East Africa would be similar to what we have been seeing in Europe and North America. But it was helpful that even in the worst of instances, it hasn't been that bad. So generally, the country has been able to continue with a lot of the economic activities that would otherwise be seen in days prior to COVID coming in. So that has somewhat helped the East African economy to bear it slightly better than had been originally anticipated. And now we're beginning to see what looks to be like the beginning of the end. And hopefully this will progress into the next year.
Excellent. You mentioned the successes in Tanzania and also obviously the positive growth in Kenya. Let's focus our attention on Kenya, the largest economy in East Africa. How have family businesses, let's look at a particular segment and sector in society. How have family businesses and large corporates done during the crisis? Talk us through how the year has been for them.
So I think beginning first with family businesses, as the crisis has continued to play, we have found a lot of businesses really focusing on their cash flows. As the saying says, cash is king. So initially, families were taking very cautious approach. They were not families that had intended, family businesses that had intended to deploy capital and go into expansion mode, took a slight step back to just basically watch the market, became very cautious as to what they spent their money on, and consequently, some of the plans were basically pushed into 2021 when it came to issues to do with deployment of capital. Some families have had to begin thinking of restructuring, and the banks very quickly allowed for two things. First of all, they allowed for a 6-month moratorium starting from March till September, October, thereabouts, depending on when people took up the moratorium. And the second thing that happened was that banks allowed families and family businesses to reorganize. So, for example, if you had taken up a 10-year loan, then the loan could be extended to 15 years or 20 years. Now, that was very helpful because what it helped a lot of families to do was to begin structuring in a way that was going to allow them to see through the crisis. Obviously, in March or April, none of us really knew how long this was going to carry on. We didn't know whether it was a 3-month, 6-month, or even possibly a 2-year pandemic. So being cautious was actually the thing to do back then. So with respect to family businesses, many of them have had some savings and are beginning to weather the storm towards the back end of the year. And hopefully this will improve as we go ahead into 2021. With respect to corporates, they have had varying sort of outcomes. Some sectors, for example, hospitality, the hotels, the tourism sector, have been very badly hit. Consequently, a lot of these hotels closed down for a better part of the year and are only now beginning to reopen because we're in the holiday season. And therefore, many of them had let go of their employees and are only beginning to recruit again. We're seeing the same trend in a lot of corporates in Kenya, some of which, for example, are beginning to think about downsizing, some of which are thinking about making certain departments redundant, and everybody is basically thinking about how best to keep the company afloat in the coming year. So there are certain sectors though that have done better than anticipated. So for example, the pharmaceutical companies have done pretty well. Remarkably, we have seen fast-moving consumer goods also doing remarkably well, perhaps as a consequence of the fact that money that had been set aside by medium to high income earners for holidays and for travel is now being deployed for domestic use. So some of those companies have done better than had been anticipated, and therefore it's a mixed bag of fortunes when you look at the sector domestically. All in all, Kenya has actually done pretty well, and as I mentioned previously, we have seen the Kenyan economy projected to grow by 0.6% in 2020, which is good compared to the fact that some countries are in recession.
Yeah, thanks very much, Daniel. I think your comment on the year being a mixed bag of fortunes is a very good point. I think this is pretty much the story across the globe. Thank you very much for that summary for Kenya. Now let's look at international investment. In the context of international investment and specifically inward investment into Africa, what have been the trends and challenges you would say have characterized 2020 for East Africa?
First of all, thank you for that question. With respect to international investors, it's also been a sort of interesting year for them, bearing in mind that at the beginning part of the year, they too were watching the market. And therefore, nobody really knew how long the COVID situation would last. And therefore, what we saw was that there was a slowdown in the first part of the year, where a number of companies and investors were watching the market. But as the year progressed, we have begun seeing some sort of pickup in terms of the speed of looking at transactions in this part of the world. It also depends on the strategy adopted by a lot of these entities. So, for example, some PE, some private equity funds, which thought that they could get a good valuation of some of the businesses in this part of the world, particularly given the COVID situation, while beginning to think about strategically making investments for which they would end up paying a lower price than what they would ordinarily have paid had there been no COVID. So some of the sectors we're seeing that sort of investment being focused on includes in the education sector, where there's some schools that are currently valued much lower than before. Tourism sector, where, for example, the long-term view is that tourism in Africa will continue to get better and better, but in the immediate short term, the valuations are good, and a number of other sectors. So it's been generally the case that there has been a slowdown in direct investment by investors. However, there have been some strategic investments where certain organizations have believed that it is a good time for them to target sectors where they could get cheap valuations.
Yeah, I think that's very interesting, Daniel, and that sort of gives us a nice sort of summary for 2020. Let's look forward to 2021 and opportunities for, first, let's look at opportunities for family businesses and large corporates that have either regional or Pan-African ambitions or existing regional and Pan-African objectives. What are the opportunities for such kinds of family business and corporates?
Faisal, with respect to outlooks for businesses, one of the most remarkable things that's likely to happen next year is that the Africa Free Trade Continental Agreement is actually going to become operational with effect from 1st of January 2021. This is the first time that we will see Africa as a whole being able to trade with each other. Traditionally, you have had trading blocks. For example, West African countries have been able to trade with each other. The East and Southern African countries have also been able to trade with each other, but we have never really seen East and West Africa being able to actually trade across the African continent. So what we believe is that this is really going to be the beginning of a new era, and it is going to cause significant impetus on growth across the African continent when we see companies in East and West Africa beginning to trade across the borders with each other. We're also seeing a lot of companies now beginning to think about strategic investment within the region. If I may give the example of the banking sector, we have a number of Kenyan banks which are headquartered in Kenya, which have begun thinking about expanding into Southern Sudan, into Rwanda, into Uganda, into Tanzania, and increasingly into DRC. And what we foresee is that that trend will only continue to expand more and more across the African continent. And I wouldn't be surprised if that is the trend that we see across the board on many, many more sort of family businesses and corporates. Another thing and a significant sort of issue that companies will need to think about is, of course, how they structure appropriately, because the African continent doesn't have very many double tax treaties as between countries. So what we're seeing increasingly are people strategically thinking, where do I place my holding company? And in addition to thinking about on-country and in-country sort of structures, it is not uncommon to find that certain groups have set up holding companies in jurisdictions such as Jersey, where they'll be headquartered. So some of these things are trends that we're going to continue seeing. And obviously, I think that the long-term projections for East Africa and generally for Africa as a whole are very positive, given the trends that we're likely to see.
Yeah, I mean, the African Continental Trade Agreement is obviously going to be, we agree, it's going to play a significant part, not only for 2021, but like you rightly pointed out, going into the future and connect all of the key economies within Africa. It's a very exciting time for Africa. In terms of international capital, will international capital be encouraged and incentivized to invest in Africa? What can East African governments do to encourage inward investment? You as a tax lawyer are at the front line of what can be done. Obviously, tax plays an important part. But what are your thoughts on international capital being incentivized from an East African perspective? What can the governments in your region do?
I think, Faisal, the thing is that my experience in the last 1 year has shown that there is a very delicate balance for most governments. On one hand, the economy has shrunk, and therefore you're not going to be beating the targets and the targets that had been set at the beginning of the year, and therefore most governments have a budget shortfall. And the temptation that usually comes in then is to claw back on things like incentives and to claw back on things like investment deductions and other allowances that have been given to taxpayers. Because the idea then is to try and collect more taxes from taxpayers. Then you have the contrary view that unless you continue maintaining a framework that allows for investment to come into the country, the investors will not come in the first place. And we're seeing in each of these East African countries, that delicate balance beginning to play out. So in the context of Kenya, at some point in the course of the year, the government essentially almost halved all the investment deductions that had been given, and in certain instances took them completely away. We also have a very sort of draconian new tax that is going to be effective in January, called minimum tax, where every company, whether it's made a profit or not, will be required to pay at least 1% tax on its turnover rather than on its profits. So companies that will be making losses in 2021 and 2020 as a consequence of COVID will in any case have to pay taxes regardless of the fact that they are startups, regardless of the fact that they may be enjoying previous capital allowances from investments that have been made in the past and haven't yet reached a place of maturity where they're now profit making. And therefore, what really the government needs to think through carefully is how can they strike the balance, collect the taxes, but still give enough room and a good conducive environment, particularly by giving the right policies, the right investment policies, as well as the right tax regime to allow and attract investment from the international investors who would still see East Africa as a place that's a destination and a good destination for their money, and where they can get good and decent returns. So there's a lot that the private sector is trying to do, to talk to the governments, to explain to them the issues that they need to think through. But it is still a continuing process, and hopefully they will resist the temptation to tax too heavily now to compensate for the gap that has been created by the COVID situation, and look at a more long-term strategy, encourage investment so that the economy can expand, and that way the country will essentially make more, and the government will make more in the longer term.
Yeah, that's. Let's hope that that this kind of view is taken by the governments in the region, because I think as the economies open up, the international inward investment is going to be acutely required in not only in East Africa but across Africa. Final question, you'd be pleased to know from me, Daniel, and this is a nice, easy, open one for you to finish on a more positive note, I hope. How do you think East Africa will do in 2021?
First of all, I think it's really positive. Already we are seeing a return of the hospitality sector. In January, schools are anticipated to open again, so the education sector will pick up. In many respects, most offices had allowed people to work from home till this time of the year, December, but it is anticipated that in January it will come gradually back to normal. So we think that when we look holistically into 2021, there's a clear opportunity for growth. When I think about our own law firm, we're beginning to think more about the practice areas that we need to grow. For example, trade is a big area that we're looking at, and we have actually recently launched a trade practice that will be looking into not just the Africa Free Continental Trade area that I spoke about, but also in Kenya's case, we're negotiating a free trade agreement with the US and one with the UK presently as we speak, and all this will bring lots and lots of changes to the Kenyan economy. So looking long term, and also looking at least from an ALN perspective, we think that the overall projection for East Africa and overall for the African continent is that 2021 will be much better and much more positive in terms of growth, and it will set the right footing for a very sort of strong performance for the African continent across the new decade, all the way till 2030.
Excellent. Thank you so much for your time, Daniel, and for sharing your insights with us. Thank you to our viewers for watching. Until next time, stay safe.
Thank you.